Welcome back, Super Traders, and welcome, Yaron. How are you doing?
Hello, I'm great.
You're great.
Of course, I'm
That's
drinking
fantastic.
mint tea.
You're drinking mint tea,
Straight?
and you're all ready for the trading that will
Yeah.
happen pretty soon. Now,
It
let
is
me ask you,
straight from the garden.
straight from the garden.
Yes,
That's fantastic.
fresh one.
That's
Great, I like
fantastic.
it.
Some more other tips that we're getting here today. Drink tea fresh from the garden.
Yes, tomorrow we will have a special mix of herbs.
Okay.
And we are going.
We'll tell them all about that tomorrow.
Yeah, today we are focused.
Today we're focused. So let me ask you one question before we continue. Looks like yesterday's Bank of China statement had a big influence on the market.
Correct. The People Bank of China's stimulus is offsetting market uncertainty. We can see that the fear factor in the US, the velocity index, VIX, is dropping 1.5%, presenting fearless market. The markets are consolidating around the top. We see that the S&P 500 is very, very close to a breakout, to its breakout levels, to its all-time highs, and we will remain under the positive sentiment during the next couple of days, at least during the next couple of days. And this is coming out from China.
This is all
and
coming
of course,
from China's
it is much more significant stimulus than the ECB or what ECB presented previously, as the Chinese central bank has the money to pay. And this is very important. This is the main difference between the ECB and the People's Bank of China. But today, we have a great technology that can provide us with a great insight on the market sentiment, on the traders or the market participant sentiment. And who is with us today, of course?
With us, we have today Andrew Lane. We have the technology of Skype that will make us listen to Andrew Lane, which will give us great inputs over what's going on in the market.
Correct. Andrew from Acuity Trading. I can tell you that Acuity Trading technology is amazing, and it provides you with in-depth knowledge about what is the current market sentiment for each and every asset or market, any market. And we are using his technology in our trading activity. It provides us with higher probability of success. It's amazing, and I would like to hear what Andrew is preparing for us today.
How are you doing, Andrew?
Yeah, good, guys. Good to hear from you. You're right. This technology that Acuity offers was once the sole domain of hedge funds. And we allow it through the use of clever technology. Now everyone can make use of it. So I wanted, as always, to give you an example of its strengths, of how to use it to improve your strategies for your listeners and your viewers.
Perfect.
Great. So
Yaron is very exciting.
I'm excited
today about.
I'm always excited to hear what other traders or other participants are doing, and
can use in order to get better understanding over what trading should we do. And we understand that you have some inputs for us today, Andrew, as to what's going on in the market and how should we follow.
That's right. So with any trader strategy at the moment, it's very confusing. Lots of news coming out, pushing traders different ways. So I wanted to look at an example of the British pound in reference to the euro and also to the US dollar. And if we start with the UK economy, what we're seeing is the UK election, which is bringing in a huge amount of volatility. I think I've mentioned it previously to you guys. We've got Labour, who are supporting Euro membership, but also possibly a tie-up with the Scottish National Party, which could lead to independence for Scotland, and also will most likely lead to higher taxes and unfriendly business practices, which is weak for the pound. We then have the Conservatives, who are pro-business, but possibly want to bring the pound out of the euro area as such, which is very negative towards the pound. So there's lots of stories coming on in there, and in a second we're going to look at how this is how the markets are reacting to this. On the other side of the coin, in the eurozone, two things have really stood out for me this week. One is that central banks around the world are selling euros, because of the return on the euro so weak. In fact, I think someone put a figure of 100 billion euros have been recently sold by central banks. Furthermore, there's a Greek problem. And what really spiked my interest was I think the Deputy Prime Minister in Greece said that he would ascertain the idea of having a referendum on whether to stay in the Eurozone or not. Basically, he wasn't going to back down. The Eurozone wasn't going to back down.
And he mentioned that he hasn't yet decided if to do the referendum or not. He hasn't yet decided whether or not to follow that.
Exactly, but in my mind, he's setting out the path of possibilities, and it's the most probable path that the two sides can't come to an agreement because there's too much for them to lose on either side, and the only way of breaking this stalemate would be a referendum, which I imagine would go in favor of more austerity and the staying within the Eurozone, but of course brings volatility. So what I thought was we could discuss that and look at some charts that are quite interesting. Now, as ever, I'm very weak on my Skype technology, but
it's okay.
See my screen any second now.
We will see your screen as long as the numbers are the right numbers and your technology provides us with the right information. This is the most important thing. And
there we go.
And I have a new tool today to help you see my charts.
It looks beautiful.
Yeah.
Beautiful.
Okay. So what we're looking at today is currency pairs on my chart, and then we've got the euro pound. And as I said, we're looking at the last 60 days, and we're looking at a sentiment called the feel-good factor. The feel-good factor measures how people are feeling over the last 60 days towards the euro pound. And as we've seen down here in the chart, we've got three lines. We've got price in green, we've got sentiment, raw sentiment in blue, and we've got what we call the moving average, the short-term average of sentiment towards the euro pound in pink. And what we're seeing is a nice little correlation where we've got sentiment picking up as price picks up, and then we've got a sudden off fall. And if I take this out, we'll see the overall picture is that generally speaking, the moving average and the sentiment in that sense is moving nicely in conjunction with price. Does that make sense, guys?
Yeah.
Very sensible, and we can see that the euro is dropping versus the pound, and we are below 72 today.
Exactly, yeah. We're seeing price falling and also sentiment hitting its, it looks like to me, down here on the bottom right-hand side, we've reached its lowest point in sentiment in the last 60 days. And what's more, if we go back to my little tool, we focus down here on the MACD, we've got a very, very negative signal line coming down for the last, I'd say, 30 days, which is compounding that. So we're seeing some really negative sentiment towards the euro pound, which to me is surprising because the pound in theory should be just as weak as the euro with the election coming up. But it seems that investors feel that with the amount of money being pumped into the economy and the central banks pulling money out of the euro, the euro is definitely weaker of the pair.
So are we going to see 0.70 exchange rate during the next couple of weeks?
Well, let's have a look at if I can just move my chart up. If I scan out a bit.
It's really interesting because we are expecting to see the round number 0.70 or around this price level. This is the fair value as we see it during the next couple of weeks. 0.7. This is the exchange rate that we are expecting this pair to hit during the next couple of weeks.
Interesting. Today, my data, you can see my trade ideas, which are just based off basic principles of technical analysis, are suggesting that the price is going to jump in the next few hours or come back up. But the long term, over the next few days, we're going to see price falling as it reacts to sentiment, which is really showing up in the chart. We've got really negative sentiment going in towards the euro pound.
Perfect. Okay, so we can see that the euro is correcting right now against the US dollar, and we are sitting around 0.72 euro versus pound. So as you mentioned, we may see an immediate bounce in the price of this particular asset, euro versus pound, but for the long run, we are going to see it much lower. So it's a perfect, that would be a perfect timing in order to join the trend. We are waiting for a pickup in prices to take another put or a sell position towards the 0.70 exchange rate.
Correct. Okay. So now we're going to look at the cable, which I'll remind your viewers is the pound and the US dollar. And I'll, again, interesting, we're quite bullish intraday and daily on this. And I'll just focus in on this one to show you what's been happening. We're using my little tool. And again, we've got the currency pairs, pound, US dollar, last 60 days, daily data, and we're looking at an exponential moving average. And what we can see here, again, prices in green, raw sentiment is in blue, averaged out sentiment is in pink, and we're getting a nice correlation with price. I'll pull out so your viewers can see more of this and focus in a little bit more. Here we go. And what we're seeing is that price is falling off here slightly, but sentiment is picking up still. And it could be that this retracement recently of strength is actually going to continue upwards, and we're going to see sentiment pushing cable up beyond 150.
What is taking taking the sentiment upwards? What reason? What is the main reason? It's very interesting because we saw the last inflation figures coming in around 0, and we have uncertainty about the election on May 7th. What could possibly take it upward?
Well, I think, as you say, the surging economy, we're getting strong data signals. Unemployment is record low. All the figures are, tax revenues is going up. All the figures are very, very positive. So I think that's it really. And then we've got uncertainty in the US with the elections, but equally we've had a strong run for the US dollar for some time now. So maybe it's the turn of the pound.
What would be the catalyst for the upward movement above 1.50? What should be the catalyst? We have the MPC official bank rate vote on Wednesday. Maybe this is what is going to push prices higher?
Yeah, I think that could be. We've got to look at the fundamentals in line with all the technicals. I'm no technical analysis, but I'm sure there's some figures, long-term figures that will be keeping the price in range. What is your assessment of cable, out of interest?
Well, we said that we are going to see this pair hit 1.45 exchange rate before it will rebound. We already saw it around 146. Maybe that was the bottom. I don't know yet. This is a very mystery. It's a mystery for me. I don't know yet how to approach this particular pair, as we are under uncertainty. And usually, when I have uncertainty theme around a particular market, I wouldn't trade in favor of this particular market. Just like I'm not trading again in favor of euro, I'm not trading in favor of pound yet. I would like to see convictions or validation for an upward movement. Validation can come from the vote. If we are going to see members voting in favor of interest rate hike in the future, maybe this one can send the pound upwards, maybe above 1.50. But recently we saw that all 9 members voted against interest rate hikes. Maybe that would be the catalyst to send it higher, and maybe we are seeing some cues in your charts that's what is going to happen. It's very interesting.
whilst you've been just talking there, Yaron, I just had a look at my chart, and I changed the sentiment type. And as you can see on my chart now, I'm showing you volatility. So I'll just highlight again. Volatility is a measure of fear in the market. How many people are talking in a fearful way towards cable? And what we're seeing is that in the last few days, reflecting exactly what you've just said, fear has jumped up massively to a level of 15.8, which we haven't seen in the last 60 days, which would reflect that people are really worried about which direction the pound and the US dollar is going.
That's what I feel. You know, this is my experience as a trader. I feel it. I feel it. We see it in the market participant activity. We are speaking about it each and every day when we are uploading our market outlook panel. It is clearly seen that traders are selling pound. We are under selling pressure. And the only thing, that, in my view, the only thing that will push the pound higher is a bit, is a hawkish tone from the central bank, from the governor, and this is what we would like to see in order to change the sentiment. Currently, 1.50 present a very, very strong resistance level, a solid rock support level, and we need the key catalyst to break this price level. And I think that it should come from the central bank or from the MPC meeting minutes or something like that. Maybe after the elections, we need a very strong catalyst.
Another catalyst could be a surety on the elections. At the moment, both the Conservatives and Labour are running equal about 30%. If Conservatives manage to jump out ahead, and we've all seen in many elections around the world, suddenly the fate of elections can change rapidly. Perhaps this would be a catalyst to move markets north, because obviously the Conservatives are very pro-business and pro-markets.
And okay, so it's very interesting that we discuss about this particular asset. As we know, the pound is very volatile, and once it has a momentum, it is going all the way up, or just like it went all the way down. It is very powerful pair, and it is if we will identify the initiation or the ignition of the movement, we can make a fortune. And we are discussing about it right now, and we said that we are going to accumulate pounds when we will identify the support level, and maybe we are around support level right now. Once we are going to break, or once we have a signal of a breakout, we are going to take the advantage and accumulate pounds for the intermediate term, for the next couple of months, in order to make profits from this particular event. Now, this is how we do things. We are taking the information and we are interpreting the information into real trading activity, and we have to do it wisely. And that's why you are here, in order to provide us with some economic and sentiment wisdom.
Well, as I said, I agree with you completely. I think the market is the stage is being set, as we say, for something big to happen with pound and the US dollar. There's a high amount of fear in the market, which will translate into volatility, and sentiment has suddenly really picked up. So the market is ready to move, and it's possibly waiting for some pieces of good news coming out of the governor's mouth.
Perfect. So I suggest that what we will do in the upcoming segments next week, we are going to start a few words about this asset, which way we are going in order to follow up this particular asset. It is very important to us, as we are a minute before a major move in this particular asset. So we have to be proactive. I think that here we must be proactive. We must take the chance and take the positions just a minute before it will blow up, or the market will initiate the movement. So I think that we are going to start with that, and followed by this particular announcement, we are going to continue with some other asset. It was great segment today. Thank you very much, Andrew.
Thank you, Andrew.
It was lovely, and we are going to continue watch the pound.
And we'll continue seeing what's going on with the pound next week.
Lovely. All right. I look forward to speaking to you next week.
Thank you very much.
Thank you very much. Take care.
Thank you.
Bye-bye.
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 All right. Perfect. The US session is going to start soon. New York session. We have great opportunities. We are going to start very, very soon. We have some great signals for you. And few minutes.
Let's take a short break.
Short break.
Take a break for a moment. Get yourself together. When we come back, we will start a New York trading session. So please
market action.
Market action. Stay tuned.